Hello, friends. Welcome to the show. Everything is going fairly well, I think, in terms of AMC and GME stock prices. So we'll be taking a look at both of those in today's show, and I'll make time as well for taking a look at requests from the audience, and I will possibly do some other sorts of summaries. I don't know, but I'm going to focus for a while on the AMC and the GME because why not? Yeah, why not? It's a good time to do it. Markets are open in America and everybody is happy and having a good time, and it's really lovely to see you all here. I don't want to take away from like Jamie's stream that's going on at the same time, but you know, hopefully we can all find a place in the world together at the same time. I don't know, whatever. Anyway, it's really good to see you all out there. Just dropping by. We've got Epiphany Jones, Jeff Smith, and Maca Prime. We've got Aaron, we've got Ronaldo Moreno, good to see you. We've got Johnny Satsuma, Nick Corey, Jose, Alfredo, D Harker. We've got a big family here. Good to see you, Rob, and as well, lovely to see you, Apple Blossom. I hope you are doing well. Excellent. Right, so today's show, how should it go? How should it go? I've done a technical analysis summary. It's pretty neat, I think. It's got all the components I think that you would really need to have in it, but I did mention during it that of course I didn't break it down in terms of the ultra lower detail, higher detail, whatever, the smaller picture, to show anything additional on there that might be worth looking at. So there's a few concepts I think that are maybe worth exploring a bit more. It's maybe worth pointing out to folk, for example, here on the DMI, that the red line here showing us that we're in chop territory, as obviously kind of corresponds with what we've seen in the price, and we want to see that we've got that kind of follow through and strength of trend. Now it's easy for sort of the diamond hand sort of ultra faith crowd, because it's just a case of like buying it when you've got the money to buy it, right? But for sort of like people who are looking to buy in and are worried that they would maybe not get the best price, quite often the best price for them is the price where you've got some sort of more confidence with your trade at the time. So then maybe you're looking for confirmation, etc., and you can get that when we see things really kind of kicking off. But in terms of the lower time frame, just like Jimmy pointed out earlier on, lovely to see it as well, that the DMI has gone up through all these phases here and moving towards a zone where it's got some strength, and we could, you know, see this as being a sort of early enough signal for us to say that things are looking pretty positive. So other aspects that we of course have, you know, there's that bullish divergence just there on GME. There's some other things I wanted to talk about, I think, and I will check in with the chat here in just a second and see how you're all getting on, because I see it flicking in my peripheral vision, and that's really good to have. Now there was hidden bullish divergence I thought I saw on a chart somewhere that was worth pointing out. Lovely too, Bad Mama Jama. Thanks so much for that. Let me see. Where was that? Where was that at? Was it on GME? I don't know. Something to keep my eye out for as I'm looking through the charts, because I thought there was something to point out in that regard. Obviously, this whole section is kind of hidden bullish divergence. So anyway, right. And one of the things about my schedule at the moment, which I was a little bit concerned about, is, and for people who subscribed to the show for the last wee while, is that they've been doing these roadworks outside, you know, and one of the things that they do is do the roadworks partly in the evening time here, to make it so that there's less traffic restriction, etc. So noise could get a bit mental. It's a bit mental already outside. You're all banned, says TradeSpotting. Yeah. Cachillo Valador, fantastic to see you. Worth His Life, fantastic to see you. Purple Haze, fantastic to see you. Dan, fantastic to see you. And we have Antoinette. We've got Harry Butt Cheeks, who is in Korea. We've got Space Captain. We've got Paul B, Johnny Satsuma, Nick Corey, Mike, and Varley, and the Dankest Dad. And everybody here, Stephen, Licky, Stefan S, Minner M, fantastic, good to see you. G'day mate, says KT, good to see you mate. Mining boom as well here. Good day, good day, good day, good day, good day. Wow, and Daniel Assange dropping in a $5 as well. That's really generous of you. Thank you so much. Oh, hey, somebody's become an early supporter. Thank you, Northwest Treasure and NW Treasure. Whip, whip. Way, that's fantastic. So I don't want to miss out on any of these chat things that come in. Of course, don't want to miss out on any of these chat things that come in. So I am opening up my wee notifications jobby here, so I make sure I don't miss any of them. But it takes a wee while to open up, seemingly, or at least it does today. Why? Somebody asked me to make the thing smaller that shows up on screen. I keep forgetting about that. It's actually something I've thought about before. Well, hey. Anyway. Next time. So yes, thank you so much. Really, really do appreciate everybody that contributes and everything to the show and all that. Massively do. So in terms of GME, of course, my eyes are drawn towards that gap up at 390s and the chitter chatter that can go on up above. Now there's something I'm kind of like thinking to myself, what will I talk about if I go on the show with Jackson Hunter, because Jackson Hunter has invited me to chat with him, and I really enjoyed the chat, the chemistry that was there between TradeSpotting and Jackson Hunter on their discussion on their show. If you've not seen Jackson Hunter, by the way, he's a good guy. He's on YouTube here, and he talks about AMC quite a lot, and he also is a musician, and is pretty cool actually. So there we have it. That's that guy, and I might talk to him later and do a wee sort of interview one-on-one with him, and that would be kind of cool because I thought the one that he did with Jamie was pretty cool, and I was thinking, well, he'll probably ask me to do some TA at some stage during it, probably. And what would I talk about? Because of course, if I'm going to be sat here talking to people, then you know, this is the ideal time to think about it. But then, do I want to save it up and talk about it later? I don't know. I think maybe I'll kind of show some ideas to you about this, and maybe he's going to get some feedback on it, and that just this sort of idea that I had for the show. Because one of the things that I like to talk about is, of course, transformative knowledge. Kim, sorry I'm late, working, and was listening to your brother, Cryface and Heart. Kim, don't be sorry. My goodness, you're so lovely. Thanks for that. Right. Oh, oof, one of the noises from outside just stopped. If you were hearing a ringing, by the way, coming through the mic, bear in mind this mic doesn't really pick up those noises too much, and it was right in my ears. Anyway, so yeah, I was thinking, what could I do? Because I want to talk about things in a way that's kind of transformative knowledge, right? And transformative knowledge is really nifty. What do I mean by transformative knowledge? Okay, and what's my goal here in this GME community and the AMC community and the overall larger ape community, if you like, and whatever sort of nomenclature you want to use for it. Of course, I'm just an individual person and not the leader of anything. What I would like to be a thought leader in, perhaps, though, is kind of helping people, you know, if possible, and ways of doing that by sharing expertise. But I often find as well that when you talk to people who are expert in anything, that they often, you know, they can relate to you in a way which lets you understand even though you're not an expert. And it's like, how do you do that? And what is the effect of doing that? And quite often the effect of doing that is transformative knowledge, right? You kind of take something that they're familiar with already, and you show them a new way of thinking about things, and suddenly pieces fit together in the subconscious they didn't really realize was there before, and it makes things a lot easier. And I think that a lot of people coming into trading have got a lot of knowledge that can be transformed, and I do that subtly across time. But every so often there's like a knockout punch that you can do, and one of the ways of doing that, I think, is fairly visually appealing when I flip the charts. So that was an idea that I might do with them later on. Katie Babes has become an early supporter, a member. Thank you so much. Really massively appreciated. Fantastic. Thank you so much. So yeah, that's a cool thing to do, right? That's a cool thing to do. And how would it work? You know, how would you take that? And what knowledge would it really be transforming at that time? And I thought, well, what is the knowledge that people are kind of operating with in the markets at the minute, from the kind of common narrative that exists with regards to GameStop, for example, at the moment? And it's to do with this cup with handle, okay? And that's great great as well. But a lot of people are looking at it, and I've drawn on, of course, a couple of times the now somewhat slightly famous, of course, caterpillar pattern, and talked about the cup with handle. Kind of that's the basis of this sort of caterpillar idea, you know, and that's kind of transformative in a sense that it's kind of fun and everything, and it gives you a mental schema to be able to remember this in the future, you know, and that's kind of good and everything. But it's not necessarily showing you the markets and why it might be possible to think like that along those ways, and maybe if I were to flip the charts, that might do that. So what are the key components that we're talking about here, really? And there's this this sort of high here, this high here, this high here. Well, within those two, we know that it's the sort of the two eyes that we're looking at in terms of the key highs of the face, those two just there. And the idea is that the prices could go up into this territory if something were to happen with regards to finding them turning around here and going towards the top. And a lot of people like to talk about it like it's a tea time with Rocky, cup with handle, no tea, that's fine, have coffee, you know, whatever in here, and there's your cup and there's your handle. Okay, great, but what else does that look like? And if I just flip the charts over, so this is the inverted chart. These prices which now look high were previously the lower prices. These prices which now look really low were previously the really high prices, and so on. And you can see a sort of different picture here already with regards to if you were looking at this stock and saying, I think this stock is going to do, from the perspective of this chart, really well here. What you're saying is that you think that it's going to turn around at this stage. And my kind of the way that I would draw attention to that would be to say, well, you know, we did have this this sort of attempt at a V-shaped recovery, sure, but we didn't actually manage to take out the key component areas that I would really look to in a V-shaped recovery there. So that sort of that inverted bullish case scenario didn't do enough there to satisfy me, certainly, at that point. And then if we kind of draw our eye down as well here, the 200 simple kind of conveniently showing us the way there, we can see that, of course, this is an overall descending triangle structure, and that if we were to come down and test this line again here, that'd be having tested it once, twice, 3 times, 4 times. What have we done in the meantime? We've never put in another higher high. We've just, you know, floundered, etc., and it's just crushing towards the downside is how you would look at that at that time. And then it's kind of like, well, maybe now the argument as to why this might be a positive case thing is somewhat more revealing in and of itself, and we can revisit all of that again with regards to the cup with handle, etc. But it just shows you just a different perspective on exactly the same information, and how maybe, you know, that might trigger a couple of ideas for people. And it can do the same thing over here at AMC, and I will come back around and chat to you again. And if you think that this section is really good, I could clip it out and make it into one. But like I say, I wanted to talk about this sort of thing, and maybe get some ideas from you and see what you think about this. So this is the AMC chart over here, and it's obviously been going towards the top side, etc., etc. And if I just flip this over and take away the drawings, and you're looking at this thing, then you can see then, of course, you know, this is just like, you know, it's just gone down. There was times when, of course, it looked like it was getting higher highs in, etc., up here, but it's just tanked and tanked and tanked, right? Now, of course, quick reminder to anybody just joining us, that's the inverted chart. This is, of course, AMC looking at it upside down as if it was negative when in fact it's positive. You can see over here on the left, you've got low numbers on this y-axis towards the top, and then down here towards the lower end of the y-axis you can see the numbers, of course, getting bigger. That's the logarithmic chart as well. There's the linear chart, and if this was a stock that you're invested in at this point and this happened to it, you'd be really shocked. Now, the circumstances at the minute that you know that make this look like this are to do with, you know, for instance, all of the positivity that's actually happened, because the reality is the chart looks like that and it's gone towards the top side. But there's other stocks out there that you can look at in the world and say, well, this is what something looks like, you know, that's gone bad for a while. If I jump up towards the 24-hour time frame here and zoom out on Rolls-Royce and look back, and then like this is a chart which is, of course, a negative looking chart up to a certain point. And what do we see here was like, well, this all happened, you know, with the sort of the end of the world last year, etc., and all those reasons to think negatively about the markets. So what we're seeing here is a story on like AMC, for example, if you want to think about it in terms of like the negative, like, you know, from a negative point of view. This is all been really positive news that's brought us to this point, and you know, things could absolutely continue on there. We're not seeing, unlike on the Rolls-Royce chart, you know, where the world's going to hopefully start to recover, meaning international travel and airplane parts and all sorts of different things, and the reasons for things to be good for them. What actually we're seeing here is that all the reasons for this company to start performing well are still absolutely in place, etc. And that's a good thing. So overall, whenever then you put up the argument like about could this go further, could it go further, you know, and talking about the top end and calling that an ascending triangle, well then, you know, absolutely it could, right? So I don't know, that might be something, right? That might be something to talk about. Now let me just check in with the chat and see how everything's getting on, and I'm just going to read the super chat from Antoinette here. First, based on your knowledge in TA, do you think it will happen within 6 months? Thanks so much. Love your accent and DD. Really appreciated. Right. Based on, do I think it will happen within 6 months? Is there, right. You might be getting a bad viewing experience in terms of my broadband there. I don't know. I apologize if you are. So I don't think it could happen within the next 6 months. Well, yeah, yeah. Although it's never fully, you know, it's not possible to make time predictions so accurately, because we know that several of these kind of catalysts that have been held up by people in the community at times to say this is what make it'll happen, this is what will make it'll happen, haven't actually done that as yet, because the full massive picture of what goes on is so vast and big that it takes, like, you know, the constant build up of that. But is 6 months enough time for that to happen? Is the same kind of way of looking at it from that question, and I would say yes. And that the alternative argument of that it could happen much sooner is valid, right? But just from my point of view, it's easy enough to be patient on it and wait, really. So 6 months, is that enough time? Yeah, it is. It totally is. Because of series of events could happen, which could, of course, you know, start to escalate things. And then when prices do move, they often move fairly quickly. That's the linear chart. It kind of just makes everything a little bit more, you know, extreme looking, the linear chart. The logarithmic chart showing these rises up the way, you know, we can see here that there's chunks of time when, you know, the prices moved up fairly quickly, and then of course then chunks of time afterwards where they went sideways for a while, then it went up quite quickly and then sideways for a while. So for me, the ideal situation is more or less to keep going up quickly, a little bit sideways and whatever, and just up and up and up. That's the ideal way, and then eventually at some point then snap and the MOAS occur, as opposed to getting feverish about it happening straight away, just purely because the more you see of these types of events, then it kind of signifies that there's a lot more people who are stuck in their positions, you know, kind of as a result of that sort of thing, etc. So that's cool. So then what else has everybody else been chatting about? And thank you so much for the donation. That's really appreciated. I really do appreciate that. And thanks to everybody else that's, you know, subscribing, like, as we're going through the show here as well, watching along. Thanks so much. Oh, by the way, if everybody that's here wants to hit the like button, that would be totally awesome. I'd appreciate it. Cool. So let me just see what the latest chat's saying here. TA on WKHS, please, I think is a stonk bing bong, says somebody at one point. So we could maybe take a look at that in a wee while. Just read the other chat comments that come in here. Eugene Kim, maybe hide the GME logo in the background and then do the TA on the chart flipped and be like, aha. She's got you. That's funny. That's funny, but that'd be funny to do. But that'd be funny to do, but I don't know, right? Yeah, I mean, I don't know, maybe that's an idea. Right, call out for Coco. Jamie has run on you. Oh, call out for Coco. I'm not actually at Jimmy's though, so Coco won't hear me. Watching Rocky Outcrop lol. Oh, that's cool. That's me. Oh, thanks. Hi, everybody. What else is in the chat here? When sleepy babies, right? Okay, cool. Love your TA. Thank you so much for that. Jeff says, yes, my fave analysis. Lol. Oh, brilliant, brilliant, brilliant. That's quality. Flipping the chart chapter. Yeah, that's cool. Brilliant. Excellent. Why invest? I missed it. Why invert? I missed it. Oh, Lapton. The idea with inverting it was to give people a different way of looking at the charts. It's just showing you the charts, which are just exactly the same information but from a different point of view, so that you can look at it and get a fresh eyes on the information that you're already absorbing and categorizing under kind of particular chunks. And what happens is that you look at something, you talk about it for a while, it takes a couple of weeks for anything to really, you know, properly change, and for you to be able to say with any degree of finality with regards to whether the pattern, for example, that you're looking at is completed or failed or whatever. And that's brilliant. It's fantastic, and it builds in a whole bunch of knowledge. But there'll be other things percolating along there in your old brainiac, which might become kind of shaken loose by looking at the same information with just a different perspective. I mean, it's common. We've seen it all the time in life, just in how you learn things in life in general. You know, just sometimes just seeing things from a different angle. Thank you so much, ApeZ. That's totally appreciated. I am going to take a look at that stock that you suggested. Just final kind of note on the idea is that the idea about it is that when you're at highs and you've seen a bit of sideways price action, it's easy to get kind of start thinking, oh, you know, we've tried and we've failed, etc., because you're looking at the highs and thinking, you know, stuff like, well, we don't deserve it, or the news media, right, or some FUD comes out, etc., you know. Whereas if I flipped the chart all the way over and you were looking at this thing coming down to these lows again and again and trying again and again, well, you know, that means its own thing. And instead of looking at it as I could do on the GME chart, for example, here, and just simply draw an ascending triangle around this area and just say, hey, look, you know, ascending triangle, you've got your low here and whatever, and kind of like chat about it like that. What I was really trying to do was like flip the chart over and then include this previous area and say, like, these are the lows, how we've tried it so many times, you know, actually we've kind of been slipping a little bit lower here, never taking out our previous highs. And that would be, you know, if you were looking at this from a bearish point of view and seeing the charts going down, it'd be much easier perhaps to rationalize this area of inflection in the charts where we've seen the prices drop down to $200, and then how they could possibly potentially go towards the top side. Perhaps for some people, just to be able to see that, they might think, oh yeah, that looks likely. Whereas then when you put it back on the other chart and you look at it and you think, oh, we're just below the 9-period moving average here on the daily time frame, and we've had a bit of a red day and whatever else, that you're maybe not feeling so like optimistic about the ideas of coming up towards these areas, and at the very least filling in that gap there, which is of course you know, in terms of percentage moves, it is, you know, absurd in a sense. Like that's 40% up, kind of just to get to fill in that gap, you know. So your human instinct, preservation instinct, it says to you at times like this, oh, you know, that you couldn't necessarily hope for that to happen. This is, you know, and it builds in these other weaknesses. Whereas, you know, maybe perhaps your killer instinct can kick in here when you see the wounded animal and think to yourself, you know, so that's that type of idea, right? So I hope I addressed that point there. I don't know. So perhaps, you know, for example, that means maybe it doesn't work so well as an idea to do on somebody else's show. I don't know what I would do. I'm just chatting, just kind of spitballing with people about ideas for how to communicate with people in a way that might show them that there's good quality stuff that we do here in the channel to help people develop skills for life. What was that thing that somebody asked for anyway? Like WK, it was ApeZ, and you said, can we take a look at, and I read it out, TA on WKHS. Workhorse group. I looked at this recently, so do I have any drawings on here? Seems not. Workhorse group came up, came down, came up, came down. Similar enough, overall in terms of the structure here compared to the past. Not looking at it in terms of like looking for history to repeat itself, just kind of taking a broad look at this thing so far and assessing where we are with regards to this overall journey that the thing's been on so far. Roughly kind of drawn in this green line to give us an idea of the schedule perhaps that you could be talking about towards the lower side, looking up towards the top side and saying, well, hey, there's this sort of general notion here, perhaps there's a degree of it broadening out the way. Of course, certainly in terms of the linear chart, if I just ditch those things back into the bin there, then you can see that we're looking at a sort of slightly different kind of aspect of things. It doesn't reveal those lows, but in terms of the movements back down the way, when you're looking at the charts and you're talking about it in terms of absolute values, yes, that's in absolute terms is of course exceedingly large compared to times over here where there's only that much movement. But the benefit, of course, of the logarithmic chart is that difference is it's reflected here in the y-axis, so you can see that that there has been this upward movement here overall. So that's kind of one of those differences. We're right here below the 200 simple period moving average, at a minute consolidating with a potential sort of bull flag on the go, finding support at the small term time frames finding support. If one could speak, then perhaps one could communicate better. Finding support perhaps in here at this 9-period exponential moving average. In terms of just kind of looking at this, what does that really mean? Well, it means that we're just really finding support at the lows that we've had over the period of the last week. If we did drop down the way, what would be happening is we'd be filling in that gap. It is an attractive proposition in terms of coming in and having a pullback down the way. And like looking back at previous times when we've come up the way, we have seen pullbacks on this thing, which are of course like in terms of, not in terms of like the structure necessarily, but in terms of like what you're looking at in terms of the movement that you're talking about, that there's frequently pullbacks on this thing which are 40-50% pullbacks, sort of which seem almost like the course of doing business as normal over here. So if we were to see a pullback in this thing from any of these regions, like what would it be if we were to just go down to that? Well, that's only 22%, so that would hardly be much of a shock in terms of the way that this thing's performed recently. With regards to this overall movement, we will have seen divergences most likely playing throughout it, but there's a bit of a this aspect here, a bit of a confused picture in the sense that we didn't get them before those two highs, but actually over the course we really did, and we pulled back down so far, coming up here and putting in what is conceivably in the broader term spectrum a lower high, and that would be hitting bearish divergence if that were to be the case. But for me, that is right now a resurgence in the strength. Actually, finding support off the median line of that, or the moving average on that one, is good to see. The uptick as well that we're seeing on the DMI as well, that a very solid cross, obviously happened very, very quickly. So yeah, broader term perspective, this thing's good to move, and it's okay to move even as much as sort of 20%, like we said, in either direction before really actually having kind of finalized what it's doing here. But if we do move beyond the $21 price point, or indeed move down below the $12 price point, those would be the areas to be looking at to kind of managing your risk at. So this area here is kind of is any man's guess as to where you could be looking for a higher low, but it also opens up the possibility of us going in and putting in a lower low at that point. So from a risk management point of view, just simply looking at this and saying that if we do actually push down below whatever you want, 12.10, 12, 11.10, then that's not so great from a sort of momentum and the potential to move higher. Taking out the 200 simple here would be absolutely fantastic. I would then look for a retrace back down at some point towards where that area has come in at, for us to probably retest the golden cross that would then emerge shortly afterwards, right between the two, sandwich between the moving averages here in the 4-hour time frame, getting that same picture is almost the same picture, obviously flipped over in terms of the moving averages, but same sort of picture here in the lower term time frame. So yeah, I mean, it looks decent here. The best, yeah, it looks decent here anything, I'm not a financial advisor on this financial advice, but you know, if we anything above $13 at the minute, it's decent for a move up towards ideas like 21 and then thereafter for 29. So there's pretty good targets up above. In terms of down below, you're looking down towards that $12 area, and then you know, we can cross bridges when we come to them if we do actually push down lower here. If we do push down lower, just keep an eye out for coming in with a lower high and actually having this be the trend that we're operating in at this point thereafter. The most positive things about this is, of course, that we took out this section just here, but the fact of the matter is we didn't take out that one, and that's the key one to be looking at. This is almost deceptive in that sense. So, you know, we want to be taking out that area, and that, of course, is that 21 buck zone, or that's, you know, that sort of idea. Right, cool. Okay, that's something anyway. That's something anyway. TradeSpawn watching Rock Outcrop while stuffing his face. Oh, that's cool. Well, if there's people still watching on TradeSpawn's channel and he's watching this channel, let's bring up GME so that they've got something on the charts that they want to see. And let's drop down towards these tiny time frames then and see how we're getting on. Now, something that people have been talking about, or some people, but people will be talking about it soon enough, I'm sure. But Jimmy's been talking about recently with regards to point and figure charts. I thought I'd maybe show people this because, of course, you know, I can show you a bit more detail on this one. And it's possible to see it if I go down towards the 3-minute time frame, because I'm not actually 100% sure what the calculation is that TradingView is using on for its calculation to work this out. But the way that this is calculated, obviously, is in terms of price movement rather than time, just like Jimmy's been explaining. But you can see a lot more of them here whenever we kind of change the parameters by using the smaller time frame here to see more. Anyway, the overall picture of it is just like it's actually pretty clear in terms of like the entire story almost of GME boils down to everything that's happened since this year. I like to talk about how there's two different companies, and the point and figure chart, when you're using this like much small schedule as this to look at it, then you can kind of see that story writ large. You know, all the period from 2008 right up until January 21 was this little section just here, and then everything thereafter has been you know, company 2.0, GameStop 2.0. In terms of looking at this one with the moving averages on top, it's not exactly clear and easy to see, but just taking them off so you can see a bit, see it perhaps a bit easier. You can see the overall structure there anyway. And this is, of course, the same prices, the same chart essentially, just drawn out with regards to the movements we've seen with price. And we're down here, and we can get any sort of movement at all will push us up above this whole entire zone, and that's that 240 area. You know, carries us up, and then we're looking up towards the $300 thereafter, and we can see that the incredible significance of the 350 zone as well. It just kind of draws in the clear levels for us, and we know in advance essentially that the extreme FOMO will kick in with movements above this zone here. You know, price action taking us up above this zone. You can forget about this at this stage in terms of like FOMO. It's this point here that we've already knocked on the door twice of, which is going to be like that type of FOMO. And kind of as an example of that, I could maybe probably I've not looked into this myself, so let's just see if I could show you the same sort of example of that in terms of the Bitcoin chart. Now I need to, of course, go up to a much higher time frame. Let's see, do I have an example of it here? No, because that's really recent. Is this, how far back does that go? No, I'm not necessarily going to get to show you the example that I was really looking for, but you can see because of the calculation changes all the stuff in the past because of the new world that Bitcoin entered, and as stocks do, just as we saw in GME when you enter into a new world. And I was just wanted to show that it's kind of like, it's not the, this is exactly what I'm trying to show people. It's right here, and it's written really clearly and large for people to see. These are drawings I presume I put in it on the regular chart, not this point and figure one, but they've obviously transposed over here, likewise with that Fibonacci. The highs that people talked about in 2017, they were really important. You could see it was clearly important. But in terms of like breaking the market structure, it was after we'd set in the other highs in the second, in the sort of after the bear market low, when we came in here and we set in this high at 10,000, then we moved down again and came up. It was whenever we pushed past the 13,000 region that really, this kind of really kicked off. And people were talking about it for a whole bunch of different reasons, but you can see it here in terms of like, if at this point when we first came up, we'd taken out that zone and moved on up, that would be that story, and this would look different as a result. It doesn't, and this is how it looks as a result of what happened. And we can see that we came up to that zone, pushed down, and then when we took it out again, it was at that point. And that's kind of it's kind of like then what I was trying to get at with regards to the GME chart just here, and the movement that we could potentially see. Yes, indeed, if we take out this zone just here. So if you consider in terms of like, this is not done on time. So I was showing you previously just there a high on the Bitcoin chart, and it looked like this in there in 2017. It was 20 grand. Then we came up to this zone here in July 2019 on Bitcoin, and then put in a high of around 13,000 or 12,000 or so. And that was what looks like this kind of a zone following on from a bearish market for a while. Now, in terms of this, it happened very, very quickly. But in terms of the actual price, which is the main component in terms of what we're looking at all, this happened in a similar sort of schedule to what took 18 months on Bitcoin at that point. And then of course we've now come up here and kind of shown that this is the area for us to be breaking. So that's an incredible significance layered upon significance about certain zones. Of course it is, and that's what we hope to therefore see. And it's not like predicting the future. This isn't necessarily definitively guaranteed to happen as a result of me talking about this, but what is possible is that in the future, when we look back, we'll say, aha, and that explains why what we see now, as Rocky said at the time before it happened, and you'd understand from that point of view. So we're just talking about that as an idea. Another thing that's maybe worth pointing out is that, you know, while in point and figure charts, you're not going to get a massive load of patterns out of them. You can see quite clearly in terms of the support, this is coming down towards the, you know, the less than a buck territory, then over here to the, you know, less than 60s territory, then over here to the less than 130, 150 territory, then over here you've got down to the just less than 200 territory, etc., etc. And that's good to see continuing on the way. And if you like those sorts of meme ideas, now this doesn't require any time on it. This could happen quickly, slowly. This section with that downward arrow I've drawn on top of it happened over the period of what, less than a month. Less than a couple, you know, less than a month, less than a typical month. Anyway, it took the space of a February month to get towards the low there, and so yeah, this could happen over any period of time. And then here you can see in terms of like any sort of exponential, because of course this is a logarithmic chart here, and you can see in the left 400, 500, 600, 700, 800, 900 towards the top side, 1,200, etc. Starting off down here, lows, it's going up. It's got that exponential sort of quality to it. Of course, it's logarithmic, so it's that's essentially, there you have it. And then and this would be, you know, rising therefore exponentially, okay, and that is nice. And it kind of shows you that you've got lows at at the minute you've got the 200 area, then you know, perhaps after your next high and down it's 250, etc., and it goes up 350, 400, whatever, that sort of an idea. So be interesting to see if that lasts. What I want to see happen is for this to, of course, become completely redundant. And how do I mean with that? Well, if I just ditch all the drawings here and draw that lower line in again, well, you're not going to get a lot of steam out of patterns on this. What we can say is that there's this just general construct in terms of the entire life of this company has been, despite the fact that there's people out there that'll say that there was a massive squeeze and it got squoze and it's never going to happen again, and despite the fact that, you know, there's us out here to say that it's not over yet, etc., that we're in this massive consolidation phase for a long period of time, and that you can just quite simply say, well, hey, if we do break it and we're looking to go into a new paradigm, then of course we know that we're in there when we get up towards $700, and we're looking at this then, of course, taking on that next phase, that next step change phase. And of course that's when we can start kind of talking about how things could keep moving up the way exponentially without requiring any sort of fixed term floor along the way, rather so much just depending on the overall exaggerated movements of the market as we continue to diamond hand. And that would be my thesis on that one. So how's everybody doing? Paul B, that would be fun. Got somebody say, let's do Bohemian Rhapsody between the two channels. That's funny. See me back streaming again, yeah, then? Is that what that means? Love your TA, Rocky, says Rachel. Thank you so much. Appreciated. Swimmin' says, have to go. We'll be sure to check out the rest later. Take care, everyone. Oh, that's really lovely of you. Thanks so much. If you could hit like button on the way out the door, that would be super appreciated. Same goes for everybody that's just arrived, in fact, you know? So anyway, that's something different. That's a nice bit of technical analysis that you're never going to see anywhere else as well. You know, anyhow, that's a bit of fun. So right now, where are we with regards to the charts? We're 5 past 5 or 7 minutes, 8 minutes past 5 actually, my time. And we're looking at the 5-minute chart there on the right for AMC and the 5-minute chart here for GME. And let's do a little bit of this for a wee while, I suppose. Or have these two guys up in the background actually and chat for a wee while. Actually, let's chat for people for a wee while. Hi, Harry. Hey ho, Rocky, says Harry. Just trying to practice TA, but do you see a possible brief retracement on AMC? Just stating what I see, but I can see there's a head and shoulder forming on AMC 4 hour. All right, great. So you've got a specific idea. Now, what I talk about as well a lot of the time, and I've done it quite a lot recently, it's been one of the kind of little sort of subtext that I've carried with me throughout the last week, is that a lot of people will look at the a pattern and just talk about it from a specific sort of statistical likelihood sort of idea, and a lot of people will look at a pattern and kind of use it as a way of talking about a grander concept, or the entire as a way of to say holistically this is what I see going on. So let's just take a look at the 4 hour AMC chart here on the regular candles and see if we can spot head and shoulders on the 4 hour time frame. So this is 4 hours here, and zooming on up the way, this is what the person's talking about. Now, how did we know that that's what they were talking about? Well, they said they talked about a pattern that they were talking about, and we know from that pattern what it means is that the person is seeing a high, a higher high, and then a lower high. So what we're looking for in the chart is a high followed by a higher high. Now that's a high followed by a lower high. So he's not talking about that phase just there. That's a lower high followed by a high just here with a big drop down in between. Could he be talking about these lows and calling it an inverse head and shoulders? Maybe he could have, but that obviously didn't play out. So that's not what he's talking about. We see a high here, we see a high here, and we see a high here. This high is followed by a higher high followed by a lower high. And we also see this overall support down at the lower territory there. So this is what our chap is talking about, and he sees it on the 4 hour time frame. Okie dokie. So what is that? What does this line up with? Well, it's fair to say, right? It's fair to say that this lines up with this gap that we're seeing on the 4 hour time frame as well. The gap which goes down as far as which is I think was filled more or less on the smaller term time frames anyhow. Maybe not actually. No, I can't remember. I'm not going to specify at that point. Anyway, this gap that kicks us down towards this sort of $50, right? That's what that gap is. So we can say that maybe we've got a neckline which is going to operate perhaps more like a zone, because we've got another reason to look here anyway. As this could be, we could be considered, if you like, any sort of movement below this line, if you were strict in saying that was a neckline, could easily just be a fake out from that head and shoulders pattern to satisfy that move just there. Okay, and then thirdly, you could talk about the movement that would be likely to see off the back of the head and shoulders pattern here, just dropping in that measuring stick, taking us in to fill in, pretty much coming down almost to fill in the gap down there towards the lower 30s, but actually lining up there at $37. Okay, that's what that would be in terms of that movement. So so that's what they're looking at, and they're saying, could there be a potential retracement then? And a retracement essentially, it just means what they're trying to say there, and what they're saying effectively communicating is pullback. And then the pullback target would be what's the most statistical probable target in terms of what that person is saying if this is a head and shoulders. Well, we know the rules of head and shoulders tell us that a head and shoulders only works 60% of the time, and that it's about having an ability to break the neckline is where that component comes into play. So if this is the neckline in this region, then we can see that the pullback that they're talking about happening could be taking us down towards that zone. So what does that measure out as in terms of what they were talking about and saying? Could there be a 7% pullback, perhaps as much as a 12% pullback? And if there is a 12% pullback, what are the chances therefore of us going on and doing an actual 33% pullback, coming down to this level? And you can kind of work that out, fairly well, in a sense that you can say this zone just here, that there's actually a 60% chance, just rough numbers, it's not the exact number I don't think, but roughly a 60-40 split here in terms of the probabilities of actually doing this, just as a statistical probability idea. So 60% of the time it actually goes towards the top side and this fails, and 40% of the time it actually does complete this move here, which is pretty good. It's pretty good odds overall. Okay, so that would be that area. So you could say that if we take out the price point here of $49, that there is a significant chance of a pullback that completes that full thing. But in terms of what are the statistical chances of there being a pullback down to this area, well, that would be, I mean, this is premature to call this a head and shoulders for all of those reasons. Not all of those, well, yeah, all of these reasons are based off of the key component of being at this area. So when the person says I see a head and shoulders, well, they don't actually see a head and shoulders, because this candle, as you can quite clearly see, is up here at this shoulder territory, whereas if the candle was down here and they said I see a head and shoulders, then I would know that they're talking about a head and shoulders and asking questions specifically about this likelihood, whereas I know, because they said I see a head and shoulders, and it isn't actually a head and shoulders yet, so to speak, that what they're talking about is what are the chances of having a pullback down to this area. And to wit, I would say that we're actually in here filling in this zone again. It's not filling the gap, because this gap was clearly filled already, but we're in here at an area which was previously support and resistance already. So if we were to just jump down the way towards the lower time frames and say, are these highs higher? Well, they're not actually higher. Are these lows lower? Well, they're not actually lower. They're not actually lower. They're equal lows there on that one, and we've got those. So we've got those equal lows. We've got there this class B hidden bullish divergence. We've got the inverted head and shoulders on the RSI on this. This is the 1 hour time frame as well. We've got the diminishing negative volume. Yeah, this is consolidating in this area just here. We're in the midpoint of that. This is a pull down, and that represents currently a bear trap. Now, do we have the negative momentum in place to go in and actually fulfill that? Well, we do. Still, it still absolutely is there. It does look fairly likely that it would come down to that zone again. So there's a decent chance of that pullback, but if it doesn't start to happen, then it's a bear trap, and that would be a bear trap in the sense of a time frame along these sorts of lines, because what you're asking here is essentially is not a macro move. Okay, it's just a small enough one in terms of this distance between these two zones, and you're saying, well, if we take out that low, will we go down? Massive bullish divergence here in the small term time frames. Could we see a turnaround from this point just here? Well, this time frame says that this looks like a decent enough bottoming zone, and actually I would say then just that if you take it from so if you say that if we take out 57, then we're on the way back up, right? If we take out 57, so from the 4 hour time frame perspective, when would we know that this is a failed pattern? And a failed pattern would be confirmed for us when we've actually got closures above $59-60 again. Closures above $60 at that point would just start to look quite bullish for a whole series of reasons. Okay, so that would be cool. But there is actually a fairly decent chance at the minute of that happening. It's all about managing your risk. really coming up with the idea of probabilities is great and everything, but you identify the inflection point here. There's certainly a small term move here to just, if you want to call that a bear trap, looking at that completion and that happening in terms of the smaller term time frames. If this actually moves up here and puts in a high which is higher than this shoulder and equals that high up above, you would say that there was never a bear trap, that was never a head and shoulders at all, because we didn't actually confirm that local high quite yet. Okay, so that's the full-on answer for you. I don't know if that requires a summary. Essentially, the summary on it is that while you're looking at a pattern and it's you want to be talking about the actual sort of the key component of the pattern to say that you're looking at that full thing. Well, you're not. You're going to have to question about whether or not you're potentially looking at an area as is kind of looking at like a painting something on the chart and where would the inflection be. You can play it either way, but it's a case of just managing your risk, and that's a fairly simple proposition. If you believe that that's the case, that's fine. In terms of the ultra small term time frames, there's a good case to be made that, you know, the 3 minute, that we actually see a resurgence here. If we take out the previous, you know, this candle of this 4 hour candle and go up and close up above there, then your kind of thesis falls apart at that point, in which case you'd have looked back at this area and called your initial feeling the type of feeling that you would associate with a bear trap. Beyond that, then there is a chance, a 40% chance, if we actually get down to that $12 line, that we see $37 thereafter. But in the here and now, it's a question of whether or not you're looking at a key component move. Is there a much reward in terms of playing this here? Well, the people who come up with the idea of the head and shoulders and just started describing it that way, to go back to the original premise of, if you're talking about it from a statistical thing, would say that no, you don't play it from there. You actually only play it when the prices have gone down the way. So it's a moot, at that point it becomes a moot point. So do you see how I went full circle there? If I had just answered you in terms of the straight up normal question, it would have been no. But instead, I took it from the basis of human interaction and what it really means to say that to somebody, and answered it that way instead. Right, cool. So, nice one. Purple Haze, both chats enjoying talking about the devil's lettuce. Oh, that's cool. Join my channel, 4x Signal. I don't know about that. How are you doing, buddy? Say something in here. That'd be cool. DFS channels, CCCK. I don't know, man. Here I am effectively giving you a shout out on the channel. Have you ever given my channel a shout out? It'd be nice to know you. You could say hello. If you've got a channel there, you could say hello. Otherwise, that's a bit rude. Right. Yell Erica's. Thank you, Rocky. Just liked and subscribed. That's brilliant. Thanks so much. Appreciate it. Listening Sky with Diamond says, exactly. I appreciate that. I'd rather the hard truth than a sweet lie. Yeah, I think that's what most. I think that's right. That's a good important part of their mentality. Just to let you know, this is the best cam angle for you. Really? Thanks so much. Abel Lopez, dang it. I accidentally talked to that bee, says Apple. What bee? Which bee? Who's the bee? Hi, bro, says DFS channel. Yeah, man. Hey, man, you're just in the chat there talking about your own channel. Are you a subscriber here? Do you watch the channel? What's going on? Like, I could give you an actual shout out if you'd like, but I've not seen your name in the chats before. I'm always I'm very supportive of other YouTubers. You know, I know how hard it is to actually take a solid crack at the whip when it comes to YouTube and whatever else. So, you know, there you have it. Like, that'd be cool, wouldn't it? Thanks again for the knowledge, brother. You're welcome, JD. Nightbot, I see. Yeah, totally. She is. I agree. You're a good teacher, says JD. Thanks so much, man. That's really appreciated. I try to be. Daniel Gill, you know, if you just teach through just being sympathetic and empathetic and whatever really is required, I mean, I get it. Like, I know what it is to look at information and kind of be thinking to yourself, well, what is that? What is that? I mean, I did a study on it when I was back in university, all about the TSET protocol with regards to the collaboration between, you know, sort of interscholastic collaboration between different research departments and universities, and you know, the whole idea of tacit knowledge and how information is transferred, you know, between academics and scientists, etc. So to try and, you know, take those lessons from back then and think about what is the tacit knowledge here, what's the difference, you know, where's the likelihood that people get confused, and within that knot, if you unravel it, you find like a lot of crossover points between where one person's got confused or another person's got confused, and actually then it's in sort of unraveling that I sort of socially everybody gets a transformative knowledge. I mean, that's kind of what I go for. Cool, nice one. Eddie Rocky, been busy but been keeping the faith, been watching your TA during my paint sessions on the weekend. Glad to catch you live. Excellent. Thanks so much, Eddie Brock. That's so good to see you, mate. DFS man, if you're still there, I mean, how are you not able to chat in the chat? I was going to give you an actual proper shout out and everything there. If you're watching along and on all the rest of it. I'm actually the nice guy on YouTube, you know? Anyway, right, you and Jimmy have been a huge help to keep me grounded during this whole thing. That's fantastic. I'm super happy for that. I'm super pleased to be a part of your experience there. Daniel Gillis, thank you. If we accidentally sold this pre-market and bought back in, we are still eligible. Well, that's a conversation that I don't understand. Luke says, love your channel, Rocky. Could you look at cost divergence since April, but still price goes up? I've been using MACD lines and histogram instead of RSI. Am I doing it wrong? Right, great, cool, good couple of questions there. It's based around a stock called Cost as well. Dragon Slayer says, I'm here to say hi. I'm here to say hi and do all that as well. So that's what we're doing here. Thanks to everybody who's currently live. I really do appreciate the like button and all that being hit. By the way, as well, if anybody wants to try and help support the channel by like leaving comments and stuff, and this is, I mean, I know there's so many of you out there that are doing an absolutely wonderful job at that, and I massively appreciate it. If anybody else wants to try and chip in with that sort of thing, that'd be massively appreciated, you know? It's curious. It's obviously curious as to why, and it's cool because we're trying a whole bunch of stuff here as to why the views are always so low on the channel. So anyway, right. It's all good. So we were talking about cost there, and the first question you asked was, are you doing it wrong with regards to the MACD as opposed to the RSI? Well, we've got the RSI and the MACD on the charts down below here, okay? And you're talking about divergence. Now, one of the issues when it comes to looking at divergence, did you see Aaron's tweet last night reflecting the price today? Do you feel Aaron's tweet is Adam Aaron? What did Aaron say? I'll come around and check. Remind me to take a look at the tweets after I've done this section. Also, Outcrop, I appreciate you. I appreciate you too, buddy, man. I really do. Keep slaying them dragons. Spread the love for Rocky Outcrop people. Yeah, everybody, massively appreciated, you know. It is. Anyway, right, so hi, question came in from the audience. I'm looking at cost. I see divergence on the charts since April, but the price still keeps going up. I've been using the MACD with the MACD and the signal line on there to look for divergence instead of the RSI. Have I been doing it wrong? Great question. Got a few layers to that question. I thought I'd kind of tackle it from the other direction, if you don't mind. So looking at that first off, you know, using the RSI for divergence, great. That is pretty good. But is that better than the MACD? Well, if you were to only choose one, a lot of people, in terms of looking at stocks, certainly seem to lean in favor of the MACD when looking for divergence. Personally, I kind of make room on the charts for more than one indicator. I always have a few, but that's kind of a component of, you know, at one side, being comfortable with double clicking on the charts here using TradingView to expand and contract them and kind of looking for what I'm looking for on them at the time. Now, you'll notice I have the MACD histogram down below here in these crazy colors, the green and the pink. And you'll be thinking, where's your two lines? Perhaps that forms a part of the reason for why you asked your question in that way. Now, in terms of looking for divergence specifically, when you've got these two lines on here, let me just show you this. It changes the look. It kind of just shrunk it down a little bit there for us. Now, actually, I'm finding it quite difficult to see those lines on this particular chart, on this particular time frame, as it happens. Anyway, but they are on there, 12:26, the right time and everything. Have I just changed the colors of them? Oh yeah, there we have, sorry, there we have them. What's this? Aha, I see what I did wrong there. Right, sound. So as you can see, changes the size of it, makes it significantly harder to look for that divergence. For instance, in this section here, this is the 4-hour time frame, and I'll get around to looking at the broader ones in a second. You can see how we had these highs in here. Now, it was bearishly divergent at times during that, as you can see on the RSI as well, quite clearly. But you can't see it so clearly on the MACD. Now, if I go ahead and just remove those two lines from the chart here, then you can see it a lot easier. So it's a question of, are you using the MACD and the signal line in order to inform your trading decisions? And if so, then of course you've got them on there for a reason. But in terms of, am I doing it wrong? I certainly couldn't say that you're doing it wrong. It might just be that you maybe, that's maybe helpful for you, or perhaps for somebody else who's watching along, and that might make it a little bit clearer for you when you're looking for those signals in particular. Okay, even if you want to just add them on again straight after or whatever. Now there's other components as well that you can use looking for divergence. For instance, the DMI that I use up here and various other tools out there. Now not a lot of people use the DMI for divergence as it happens, but I think it's quite a good one for it. Certainly as well, it's nice to have a few just to kind of give you that sort of confirmation, if you will. Now looking at this chart and asking the question, we've had divergence since April. What could the person be talking about? Because they didn't actually specify a time frame. So just trying to re-find that question. I don't think they did specify a time frame. So just let's figure that out for ourselves. Okay, so where was April? And we can draw in a vertical line to see what they were talking about. And that's another donation that just came in from Susie Che. Thank you so much. Thank you, Susie. I massively appreciate that. That's really kind of you. So if I just drop in a vertical line, that's somewhere in March. They're talking about in this period of time over here. So let's just bring up the charts here and kind of look at it a wee bit closer and really ask questions about what this is in terms of highs and lows, just before we go even any further and explore the idea of divergence. Well, okay, so we can see that there was, like, say, a high here, and then this, which is a really unsatisfying low, if it's a low at all. Just looking at it kind of closely, we only really kind of took out this little inflection area by like a tiny little bit. Okay, though, on a smaller time frame, that will be a low. Then we've got a high here followed by this really unsatisfying low as well, immediately pushing the price back up and then dropping right back down, but not taking out that previous low, etc. Just coming back down to where it was before, then going up and down and up and down and up. And throughout this entire period here, you can see that we didn't actually successfully trend up the way. So in this period of time, were we trending and were we putting in higher highs and higher lows? And this is one of those kind of complex decisions that you need to kind of come to, or conclusions you need to come to as a trader or an analyst, certainly, when you're looking at the charts. And I put out an episode recently talking about highs and lows and talking about trends and really kind of getting deep into this idea of really, are we trending or are we going sideways, etc. And this then feeds back to divergence. Now, a lot of people will look for divergence during sideways price action. However, a lot of people, myself included, tend to, while we look for it, point out to ourselves consciously that while it's during sideways price action, it isn't necessarily really that great necessarily. Okay, and what other components maybe could we be looking at if we were being blindsided by that? And just drawing in this lower upward sloping line here, you can see that perhaps during that phase of price action, just delete all the drawings now, you can see maybe we're in this area, there was a little bit of an ascending triangle, etc. Nevertheless, we were seeing a good deal of divergence in here, and it would have looked quite like a wedge as well. And it would have been a debate that you'd be having and saying, well, are we looking at this, and do we anticipate a drop down the way somewhat commensurate with this area here? Now, the textbook will tell you you're looking for 60% of that move, and you can see here we actually did get 60% of that move before coming back up the way. Now, when the textbook talks about it, and I talk about it going for the full measured move a lot of the time, I often try to make it sure that people understand that when you break out of something and you've moved 60%, you might see inflection of some sort, and then of course you could either see the prices going up or indeed going and continuing on for the rest of the move, which would then give you your full measured move if you were looking at this from the point of view of, can we get the full move? Well, yes, after we've gone for a 60% component of it, maybe we'll see an inflection and go on afterwards. It's wise to then be aware of the scenario and manage your risk accordingly. So what we saw afterwards as well is that the prices came right back up again and tested the top end of that zone and just kept then pushing on up the way overall. So this does look like quite an extended market, and when we bring up the divergence things down below here, we'll see this story as well unfolding for us. Now, during this period of time, while we had these lower highs, which is of course the key component here for looking for the divergence in this trend, just to kind of keep it going here with this analysis. When we're looking at these highs at that period just there and seeing these lower highs, we're also looking at these lows, right? We're looking at these lows because there's a low and there's a low. If you're calling those highs and calling that divergent, then what are those lows? Well, all of those lows, all of them are obviously higher lows. They're obviously higher lows. So on the one hand, while we have this potential ascending triangle, right, which is why so often an ascending triangle can end with making an ass out of you and I. While we have this where it's not 100% clear that those highs are necessarily higher, what we can see is that if you are calling those highs, then you're calling those lows, and those are obviously higher. And what do we have here in terms of those higher lows? Well, what do we have? What do we have? What is that? Maybe to you all along, this was hidden. Maybe this was hidden to you somehow. Maybe this is hidden bullish divergence. So when you're actually looking at it and you're saying, well, hey, am I doing it wrong? Well, no, you're not doing it wrong, not at all. There's just maybe perhaps a little bit more sophisticated way of proceeding through what you're looking at and kind of trying to understand things from a more holistic point of view, perhaps, than simply looking at one particular signal. When it comes to divergence, is the most powerful signal, and I would absolutely recommend everybody learn all about divergence. Now, having said that, it is, of course, a warning signal. It's a warning signal, okay? And it tells you to be aware of something because it could, of course, go against the trend, which in this case is positive, could, of course, go against you if you see that bearish divergence on the go. But looking out for hidden bullish divergence along the way, looking out for patterns along the way, and kind of asking questions. And then as well, regardless of the patterns and regardless of the lows, etc., during this, which is obviously an upward trend, looking at the key inflection points in the market here, the key market structure, and having moved above it, then of course we did see that continuation, that follow through thereafter. We could come back down to this area. If we retest it and don't find that we've got divergence, what has this actually done? Well, it's boiled off the possibility of going up here and putting in an actually really distinctly, obviously high move. I've talked about this numerous times on the channel. People have heard me say it so many times, although they may never have really kind of coordinated all the pieces in their brain. I've said that counterintuitively at this area, it is actually ideal for us to see that the prices did not close higher and put in a high, because if they had have, then we'd have had bearish divergence. Actually, what we've managed to achieve in this period of time was boiling off of that bearish divergence, being able to put us in for a move potentially to go up higher should we see us recapturing the neutral line, and so on and so forth. Understandably, that's next level, but to say that you've been doing it wrong would be a gross over reduction in terms of what you've been doing. The chances are you've been doing it perfectly well. Thanks very much for the question. It was a good one. With regards to this chart, we've actually taken out, with this movement up over here, the prior high as well. This is a recovery which came up towards the sort of 80%, 90% zone, had inflection at around about these areas, and then moved up. With regards to Fibonacci, you can see here quite clearly that we found support numerous times at the 236, indeed, before moving on up. And the story actually is a bigger picture one than what you were quite looking at. Now, of course, it does leave you feeling rather absurd when you're looking at this high here and saying, why the hell did the prices not drop down the way? And really, it's not so much a component of you doing anything wrong. If you did take a trade that went against you here, it's just as simply as anything is with trading. It's a case of managing your risk. What I do here is I don't predict the future. Instead, I identify areas of risk where you're able to arbitrage, you know, high risk and low risk. And that is how you trade. Drop the mic. Cool. So back over to the double chart thing, and we can chill out for a wee while. How long have I been at this show so far? An hour and 6 minutes. That's probably a fairly neat time overall for the show. So maybe I tried to kind of like look towards wrapping things up over the next 15 minutes or so, something like that, you know, whatever, and see how that goes for me. Dragon Slayer says, Rock Outcrop, stupid question. Big time inflation is about to hit the dollar soon. Is it worth buying GME listed on other exchanges? Frankfurt ticker. GS2C, explain how MOAS can unfold across exchanges. Oh man, what a big question. I'm not a financial advisor on this financial advice. I would say that while people expect to see huge inflation, that one of the components of the reverse repo market that's going on in America at the minute is actually, bearing the brunt of that cost of the inflation. The overall outcome from that, from the differential, for example, between the rates that they're being offered and the rates that they're then able to close out, and in terms of their repos, which would have been higher, then the differential between them is probably going to be proportionate, or at least the mechanisms that are set for that, for the overall inflation rate. So while there will be inflation, of course, the American government system is specifically designed to keep it in around about that 4% area, and that is currently what the people in charge believe will still be the case, despite the fact that, of course, you'll have read numerous reports to the contrary out there. Now, beyond that, when America experiences inflation, the rest of the world experiences inflation, and Europe is, of course, no different to that. The European zone at the minute is actually launching a whole load of new bonds, which will, of course, as well partly influence that. Now, anyway, beyond that factor, should you buy on other exchanges? Well, that's a very complex and extra question, but in order to hedge against inflationary risk by buying anything anywhere at the minute in whatever currency that you happen to have, you're avoiding the exchange fees as in terms of changing from one currency to the other, and all of the additional hassle that you might go through trading on a foreign market for yourself, perhaps. So in terms of that sort of sensible decision, I mean, if you've got the dollars now, would you buy it on a foreign exchange? It's kind of like conflating two separate things together. You're not protecting against future inflation of the dollar by not owning the dollar, by first changing it to euros and then not owning the dollars. By the time you've got the GME share, you've got you've got less dollars, right? It's a single thing. Big time inflation is about to hit the dollar soon. So anyway, the dollar, that's a massive debate. It's a massive, super complex debate that, while just for the sake of argument's sake, I'm happy enough to kind of just sit there and say that there will be inflation, and I see it happening all the time. But the inflation has been really hidden from us for a long period of time, and we've had loads of inflation over the last 20 years. It's been huge, but people haven't actually necessarily really felt it. The kind of one of the components that I would say with that whole debate about we're going to have huge inflation soon would be to say, well, can you identify where you stand before we kind of chat about that? Are you somebody who thinks that we haven't experienced really huge inflation up to this point? In which case, okay, cool, at least we know how we're talking, not talking cross purposes, because I would say, yeah, you're right. But it's the same old story that we've been at for quite a while, and we get most of these impacts hidden from us, and there's certain mechanisms out there to create that sort of overall feeling in place. And yeah, cool. So then what else? Great breakdown. Truly appreciate it, says Luke. Definitely misses that hidden bullish divergence with the higher lows. You the best, Rocky. Well, thanks so much, man. I mean, that's just really what we try and do on the channel here. It's why it's magic, and it's why, of course, there's 139 concurrent viewers. Awkward Loan, chatting to Apple, that's nice, cool. Dan says, Rocky, can you give a quick TA update on Naked, and when you think it will go back up? Well, Naked, off the top of my head, I hope to see it above 67 cents. Let's just look at the chart here right now and see what we've got on the go for Naked, and this will be the last thing that I look at on the charts today. I will I assume, right, probably. And look, that's very appreciated. Thanks so much. It's actually really appreciated when somebody does that after I've done some TA. They said thank you already. I've read it, and that. So like they're not doing it to get my attention. They're not doing anything else. It's just straight up gratitude. I feel that. I appreciate it. It means a lot. Right, so Naked here, we have it, yeah, that negative crossover there, or that positive crossover there is happening during a period where, we're anticipating volatility. This has got a low here. Its previous low was obviously not as low. I obviously can't see the charts right now. In fact, I'll make it so I can't see anything at all. And I'm looking right now at these oscillators just because now price action is king. Price action will always determine all decisions. Market structure, price action, they're of course the main thing. But what I'm doing just now is just kind of sussing out this situation before I even take a look at the charts. I can see, of course, that we've got, of course, a high here, which is higher than that previous high. But by the same token, I can see that we've got a low here, which is lower than this previous low. And this is, of course, the 4-hour time frame. Likewise, I can see that we've got this upward kind of channel on the RSI. I can see that we're at the neutral line on it, challenging in around about that with this moving average. And that, of course, we've just had a positive cross while we're also experiencing here in the DMI extreme volatility volatility likelihood upcoming, or instead, you know, a better way and the more accurate way of saying it, a complete lack of volatility starting to show in this, in the terms of the trend here, in terms of the strength of trend, or a complete lack of strength of trend, sorry, which then, of course, you know, it's like the eye of the hurricane or the calm before the storm. Essentially, zooming on in here to see what the TAN actually looks like at this point. What time frame is this? The 4-hour time frame. Did I look at this yesterday? Because I mean, that's what's just happened. I don't think I did look at this yesterday. I don't know, maybe it was yesterday. You tell me, you guys are in the audience. So what we're seeing here is, of course, is this is obviously then hidden bullish divergence right here at this low, where we didn't take out our previous low, we actually put in a higher low. That gap was defended. This wedge idea absolutely worked out. We pushed a little bit outside of it, came back into it, took it out and moved towards the top side, coming in here and giving us a price of 67 cents. Nice one. So what I'm looking at right now is essentially we've done, you know, the anticipated move in terms of the wedge here. As you can see, let me just drag that green line from here to here. Right, okay, so like that's roughly there, and as you can see, you know, that's the move that's occurred here. So in terms of the edge that this wedge gave you to get to this point here, that's evidently expired. How are we in terms of the overall trend now, this point down to this point? What do we think in terms of the movement down the way? Looking at it just now, can we anticipate, as we look at this right now, where it will be? Where would this be in terms of how high up have we come? So how high up have we come? Now, the people like to talk about the magic of Fibonacci, and I like to talk about how humans have got 10 fingers. And if I came round to your house right now and I started chopping off your fingers, right, you might be a bit shocked at first, and then suddenly you've lost a finger, right? Yeah, then you might be a bit more shocked as soon as you've lost the second one. But maybe there's still a way out of this. You know, you can still use both your hands at this stage, right? But then say I then chop off the next finger, everything in your body at that point will be telling you something really, really messed up is going on at this point, right? It's really awful. Something has to be done about it, right? And that is kind of the difference between moving up 20% relative to really where you were before. You've got 10 fingers, of course. That's kind of the idea there. So if we were to push up past this zone, then we'd be taking out the 236. That has not happened as yet. This is obviously this was the low risk component. Clearly, even if we'd obviously not had anything on the charts at all, no wedge, no whatever, and I just did a Fibonacci retracement, for example, down to that low and talked about it, where would you be going to? There you have it. You know, we've already done the low risk move. At this stage here, you know, you could be looking between either of these zones. Now, do I expect to see follow through? That's a very rich question. But do I have the volume to give me that expectation? Not particularly. You know, is this breakout associated with unnatural volume? Well, it's more than what we had quite often in terms of inside it, but not really. It's still just part of the same overall kind of set of components that we're looking at there. So is it super fantastic? Not so clear. 1 hour time frame, coming down here and examining, you know, where we've come from in terms of pushing past our previous highs. Well, you know, we really do need to take out, we need to take out that 236. So 67, yeah, it's your best buy price point here, but you'd be managing your risk accordingly and saying, well, if it dropped down 10%, I wouldn't want to be a part of it. Could we come back down here and put in a higher low before going on? Do we consolidate at the 236? All of these things are perfectly common. I mean, your best buy price actually isn't 67 at the moment, I suppose. It's more like, and I'm not a financial advisor, none of this is financial advice, but as a sort of looking at this chart and saying, well, at this point, after this hidden bullish divergence, coming up towards that area, having fulfilled the expectations of the market, it would be nice to see us putting in a higher low. That would give you a much lower risk entry, so that would be your best buy price to get it at. Now, can you actually say it's definitely going there? Well, you're asking me at that point to start kind of splitting hairs and going down to even further down in the time frames, etc., and kind of trying to make assessments about it. I can leave that much with you, at least in terms of knowing the key areas to be looking out for, and that is, of course, that 61 area. Take it out, we're going down another 10%. Take out that 10% zone, and it's a broader term question about where we come in at, right? And it's enough percentage points along the way to have probably made your mind up long before then. Just looking at this as a trader, of course, I don't really particularly, you know, I don't even don't really care, you know. That's what I'm looking at. And because when we start to move towards the top side, we take out that key area that we've got in there, 84, and start to push up the way, then we can start to look at the bigger term picture. And by jingles, this is what, you know, if I care about something, like this is where I start to care about it. And of course then we could be looking at that to push up. Now, huge wicks in here. We all know about it. You know, the volatility is for real on this thing, but the prices ascend so rapidly. This is the logarithmic chart, the linear chart, sorry. Let me just kind of show you, you know, you're looking down here at the 67 cents zones and talking about prices up within the dollars and the $2, etc. So it gets up to being like cryptocurrency style sort of stupid movements, etc. And the lack of liquidity in this market, any of these areas in the past where we've seen these extreme wick moves, has been fairly revealing. Obviously, this is a market to be very prudent in and take profits in. It looks to be traded with like a whole load of trailing stops on these ones. Like this keeps going. Somebody decides to start selling it. Everybody's trailing stop gets hit, and the market just crashes back down thereafter. That's what that kind of has that feeling of, or indeed an extremely low liquidity one. So that's what we're looking at with that. I can't actually remember why you asked me to come over here and take a look at it. All I know is that what we talked about last time evidently worked, and at this point here, well, you know, it's kind of like for me to go any further at this point here is almost unfair on you, I would say, at this point, right? Leptin Inc. I'm not sure if it will remain in this way or if that's cool. You're just chatting about something. Huge wicks in here, huge. Yeah, exactly, huge. my be huge. Struggling to read that one, but I'm going to take it as a compliment. Lucy in the Sky with Diamond says, that is the epitome of lazy. What the hell does it take to hit a like button? Jeez, totally. It's huge, says AB Lopez. Enjoying the stream, says Nightbot. Be sure to subscribe. Well, you know, all 136 of you here almost certainly are subscribers already. I recognize all your names. I love chatting to you, and I appreciate you coming here and spending the time with me. We're 1 hour and 20 minutes into the stream. I feel like if I kind of wrap up the show in the next few minutes, that this is certainly keep it below 1 hour and a half, then it's a more digestible, attractive option to anybody that might be looking to look at a live stream and maybe learn a thing or two. I don't want to clickbait people so much though, because of course, you know, it says AMC and GME and even Bitcoin on the label there. So for this last 10 minutes of the show, I think I should probably go ahead and do a bit of the TA on some of these other things that I kind of, you know, at least would have talked about. So if I bring up the Bitcoin USDT chart here, the Bitcoin US chart, USD chart, whatever, you can see you've got this, obviously this has all been laid out in the past fairly technically, but zooming into where we are currently, we had this low, it came in. Did it have divergence? Yes, it had divergence. Did it have divergence at satisfaction, you know, some degree of satisfaction compared to previous areas on the chart? Well, yeah, in the sense that, you know, we actually had a low perhaps, you know, here for the first time, and that this 24-hour chart is kind of, you know, deceiving us, jumping up towards the 2 hour or the 2 day time frame, still kind of asking about that one, the 3 day time frame, and we can see here, yeah, so they all came all the way down to that low, one high, one low thereafter. Not everything that's happened all the way down to that low, up and down again, and that's where we are, even though it looks like we were coming in here previously for lows. So at this point here, do we actually have it? Well, we do. And can we move up from here any further? Well, we certainly can, and we're already doing, you know, a lot at the meantime, at the minute, having come into 35,000. The next target sits there at 36,666. We did talk about this before. We're pushing up the way, and I do kind of feel like that this has absolutely got the legs in it to keep going up. We need to really be aware of the fact that there's this zone between 38 and 42k, really 38,000 up to the 40,000 region. We get in that zone, it could easily fail. That would be putting in a lower high at that point and continuing on down the way. We take out that zone and our other high, things start to look pretty great. Drawing in the Fibonacci then, which actually takes us from the all-time highs down to these lows, then we start to get the opportunity to look towards the higher areas, 46,000, 50,000, 52,000, all of which coming in without needing to change this around from being potentially a downward bear market having begun overall in crypto. What are you saying, Rocky? I'm saying that overall potential there is to see the prices go up 50% in this thing from where they are now, and to still ultimately say that we're in a bear market after all. So that's the kind of the danger that you get from being caught in bear traps where you wouldn't necessarily want to be caught in. And of course, then from this point right here, betting everything on that happens is putting you right in the danger of this just here operating now, for instance, as a bull trap. We really do need to see the prices take out the market structure. It's imperative for that to happen. It's very, very, very clear. I want it to be very obvious to people who know at this, watching along at this stage, that this isn't just some sort of joking around. No, this is imperative. That has to happen, or else there's serious problems. And that's what we're talking about. We talked about it at the top side as well. We talked about 58k. You can look at my video, Bitcoin analysis for dummies, and I just made it very clear. So there you have it. That's what we're waiting for. Taking out the neutral line, very good first step along the way in terms of the RSI. The DMI, yeah, sure, okay, it's in a negative stance. Of course it would be. Will we see this ever turn around in the positive time frame? Too low, too hard to say. In terms of the lower term time frames, though, you can see in the 4 hour that we have got the potential for a cross to come in here and move us towards the top side. What we're seeing right now, Rick and Morty lips on this is then from a negative stance. This could easily operate as overall end up trapping some people in a bullish scenario, so look out for that, right? In terms of the smaller time frames, naturally we are seeing this upwards movement, the DMI, but we're still not in there, still not coming blue. We're still orange on the ADX. It's not there. It's not a strength of trend as yet. That's what I'm saying. The message is clear. Right? So other things from the world. How's Ethereum doing? Is it changed? Ethereum's price point here, $2,000. Oh, great, cool. Well, $2,000 is really important for us, right? This could be a nice V-shaped recovery, where we talked about that before. Well, all of the other ones so far along the way. So can we actually do something which is going to change something? Well, all of these phony higher highs that come in here and give you the idea that you're trending towards the top side, where you've just got one area in here, are all still ultimately showing us up to have lower highs, and not only that, but coming in with hidden bearish divergence along the way. At this stage, it actually has to say, and I'm sorry to say it, but until we're above $2,300, this thing still stinks. Moving on the way to Chainlink, for example, Link USDT over here, you can see that the prices on this one are doing similar thing to Ethereum, but we of course, this is a very long time ago that I drew that line in. Now, in fact, from all that time ago, but we've we've come down here and we've done something fairly significant in terms of double bottoms. Can we actually start to take these areas out and move towards the top side? Well, yeah, again, until we see the prices above sort of $22, $23, $25 on Chainlink, it still stinks, but everybody likes Chainlink when it stinks. It's a good long-term play overall, right? Am I right? Shout out to Northwest Nerd. Looking here at our wee pal XTZ USDT, this is Tezos, the community, one of the few communities out there to have ever acknowledged the sort of the dedication that I've put in towards doing these cryptocurrencies for analysis for people, making many people into millionaires out there. It's been a fantastic journey so far. But looking up here and seeing that the price action here has moved up past its prior high at this point, big movement would be required to get up towards 320 at the minute, but the prices being in at 280 at the minute are absolutely fantastic. So while this doesn't look necessarily any better than any of the other ones, it's like we can see the prices moving up all the way towards all the threes before we start to get positive on it. It's not, percentage wise, it's not a million miles away from what we're talking about with Chainlink, etc., but you're talking about in terms of something which is a relatively cheap coin moving up another chunk. So we've done it so far in terms of like that movement up the way gave us 20%, etc., but we can keep on doing that. Question, if we're able to take out this next 10% move, then of course I'm looking up and it's another 10, another 10, and another 10 thereafter. Great, sounds great, but of course we need to be aware of this bearish divergence here. Unless we actually do that, then we're going to probably drop back down towards 222. Okay, so just to be clear, unless we go for all the threes, we're putting ourselves in a position where we're very likely to go back down to 222. Unless we get up there and actually hit and then sustain prices above, say, 290, 280, or where we are now, after having been up as high as that, or indeed get follow through and go on beyond, then we're still in a right. Great, not a financial advisor, but I said it enough times there that nobody could potentially think I didn't. How long? We're 5:55. Brilliant. This is a good time to go over towards GameStop and see what do we want to see happen for the rest of the day. It would be nice if there was some sort of notion that you could come in here along the lines of inverted head and shoulders, etc. I'm still waiting to see if we can see some bullish divergence play out for us here in terms of the regular candles and all that stuff here on the GME charts. I would like to see that happen. I'm aware of the fact there's a gap down below, so seeing the prices at any point over the next day or two down at $200 isn't really going to shock or scare me. Overall, I'm still looking and saying that the best buy price in terms of the rest, having an edge in the markets, which is extreme knife catching, quite possible bloody fingers, but a nice one to try and get would be 177. Can we get there? Who knows, because at the minute $200 has been the best buy price and people have taken that option. The 5 million share offer and ended, and it'd be nice to be able to look back in the future and have this gap here still there saying, well, that's when it ended, that's when it ended there, and that we didn't go back down to test those zones. It has to be acknowledged that that's where we are until such times as we isn't. At what time is it that we is and such times that we isn't, says somebody in the audience, I'm sure. Rocky, well, the chances of us getting up here necessarily today aren't set in stone, but it'd be nice to see us up towards 233. Just having the day ending again at 222, hitting out all the twos, $222.22 is totally lovely and phenomenal for me, because it establishes us in this base as having moved up the way with the bullish divergence, the perfect time, everything panning together there. It's almost as if people knew at the lows here before they kind of announced the market at these closes that the share offer in hand ended and there would be this move up the next day. You'd think so if you had that kind of insider information in terms of being on the front lines. It's not actually insider information, but you would have had some sort of sensors out there kind of figuring that out, and then it moved up accordingly. But we've not taken out market structure, so let's remain patient. We can call it 233 if you want to be kind of this is when we can start getting more excited above 233, really kind of kicking that in the way. But I'm actually really chuffed to see prices above 222 in terms of their closures, and completely and absolutely satisfied as well the prices are above 200, even down to 177. Maybe that's not all the TA in terms of really bringing this in with the analysis, but this is positive, and I am looking for a follow through at the minute. I am wanting to see this continue on. I am looking for that to happen. I feel like overall that this could be the point when we come back down and retest the neutral line, that we look back and say, yes, we had that small pullback, then we kicked on from there. And that's why I kind of like flirting with the idea of 230s by the end of the day, but not committing to anything along those fronts, bearing in mind that if we did pull down the way, having put in these lower highs, etc., overall we wouldn't have hidden bearish divergence on the RSI, and I'm looking to try and see if we can kind of flip into the positive mode on the RSI. Did I say the RSI? We wouldn't have it on the MACD, and we're hoping to flip into positive on the RSI, while the DMI is giving us that signal, tentatively waiting for that to happen, while we realize in the 4-hour time frame we're still in chop. In terms of AMC, the movie theaters popcorn company, we can see that, wow, that looks interesting, that there's a debate on at the minute as to whether or not this is a little head and shoulders that could be showing up in the charts, hiding off the drawings. You could say shoulder, head, shoulder. Well, there's a few issues with that, one of which being that if this was a head and shoulders, it would need to be at the end of an upward trend. Well, this is actually considerably the middle of a consolidation period, as opposed to being at the end of an upward trend. If this was to be at the end of this overall upward trend here, then we've nowhere near started kind of building in that head and shoulders yet in terms of how that thing looks. Overall, I was kind of considering ideas along the lines of, had we put in a higher high and pulled back down, that this could be some sort of diamond. Really at the minute it's just waiting for this to kind of, mostly waiting for this at the minute to assert itself above the $65 price point. Will you still love me? Will you still need me when I'm 64? Well, hit 65 and I'm all in, right? Not financial advice, that was just a joke. As you can see right now as well, with regards to the analysis we did during the live show, this is the live show, but earlier on, now we can see that there's been this big pullback ever since we talked about that in this zone. I mean, it's not that huge a pullback, but in terms of where we are now, we're 2.22% higher than we were, but when we were talking about it at the time, suggesting ideas about why maybe you might think about it as being a potential bear trap. Now, is that enough to say that that's our that trap has been sprung? Well, currently no. I mean, this could absolutely continue on down the way. There still is a fairly good chance of that being there, for that 52 buy price, or perhaps even down as low as the 49 buy price, as being good ones, things to look out for. That's enough to say that I'm satisfied seeing the AMC prices doing what they're doing at the minute. If they were to actually drop down to these levels, I'd also be satisfied, and it represents a decent buy zone 60% of the time. 40% of the time you regret it and wish you just bought it at 37 instead, so I'd be wary of that, and happy enough in terms of waiting for confirmation to give up any few percent here or there, to try and buy into momentum, as opposed to catching knives on it. Like I said, fairly bloody knives, fairly bloody fingers are available for people who are looking to have them at the minute, but we can also wait for confirmation. If we do break above these previous highs, then of course it starts to look like we're in a new phase in the market again, looking to try and have this overall operate as what was formerly resistance, then become fairly decent support for us. If I were to fling on the VPVR, you see a whole chunk of price action, a massive node in here. And what the point is there essentially is that so long as you're generally speaking more than 50% between the lows and the highs in this overall territory, bearing in mind as well that any measured moves would take us overall to where that range expresses itself, then essentially what you're looking at is saying that you're in the positive aspect of the consolidation, looking to move towards the top side. And if you look here, then you can see in terms of this Fibonacci, I tried to draw in there to try and make it so that it was visible for folk. Take out a couple extra lines here. Then you can see that there's that 50%, and we're right here, right at that line, 55.47. You know, could that potentially be that bear trap? Who knows? Who knows? But that's how it's done. Yes, I've come to the end of the show. Thank you so much for tuning in, everybody. Let's do the reverse roll call, okay? I'm going to hide the browser off the chart, going to spin up the credits and get them rolling, and I'm going to chat with you in the chat for the last sort of 5 minutes. This is the Bye Sister chapter of the video, and so we'll chat here for 5 minutes, and I'll say goodbye to everybody and everything else, and I can see what yous have been talking about here. Rocky Outcrop, you know I have a hard time controlling myself, and you're not helping much. Dragon Slayer, I am prepared to see GME drop on the 25th of June, following well into the 28th to 29th, because they need to deliver a boatload of GME FTD reset cycle following by volatility thereafter. Cool, okay, so there's a bit of that old DD. I tend to leave these sorts of things to the experts out there. It's good to have people passing information on. Kevin says, crap, gotta go. Hopping off. Take care, everyone. Cheers for tuning in, buddy. Appreciate it. Like button on the way out the door if you don't mind. I really do appreciate it. Arts of Labour says, thank you. You're welcome. Apple Blossom chatting to Epiphany Jones says, me too there. Glad I get to keep them all. I wonder what you're talking about. Maybe you're talking about bananas. Thank you, Rocky Outcrop, says Epiphany Jones herself there. Really appreciate you and what you're doing. Well, that's really appreciated by me, so thanks so much. Sauced Food Cart says, drinking stream this weekend. No promises on that front. No promises on that front, because I did like 3 drinking streams at once last weekend. Yeah, I don't know, man. I don't know. Alcohol is toxic on my psychology over the period of the week. I don't know, man. I don't know. I'm in two minds. Don't know. Maybe. Stephen Kimbler says, thanks, Rocky. Awesome stream. You're welcome, Stephen. Thanks so much for tuning in, by the way. Harry Buttcheek says, where's me name on the credits? Yeah, where is your name on the credits there? It should be on the credits, right? Where is it? Oh, interesting. Is there anybody else that's missing off of that? Did you donate, though, actually? Am I reading this wrong the way here? I don't know. Anyway, I'll get around to read them in a second. Juro, cheers, buddy. You and Jamie, highlight of my day. Thanks so much. Really appreciate it. You the man, Rocky. Thanks, says Awkward Loan. Laughing faces we've got coming in from everybody. Right, okay, cool. So, cheers from Supernova. Great work as usual. That's great. Apple Blossom. Nightbot has been threatening to chop off people's fingers. She writes her own program now. Oh my god, has Nightbot really been doing that? Has she? I'll have to kick her head in, Apple. She's been annoying you, I'll kick her head in, okay? Ronaldo, what are you saying? Thanks, Rocky. Cheers, everyone. Thanks, my friend. Really enjoyed your live stream last night. It was great chilling out with everybody. By the way, if you haven't already, check out Ronaldo. In fact, I'll bring up the browser as well just for this. I know you probably have. Like I say, YouTube doesn't bring new people to my streams. That's still yet to actually start happening. But we've got this guy in here live from the Troubadour. Ronaldo Moreno, great show last night. and I'll just pop in the link in there. If anybody hasn't seen it, you might enjoy that. You know, you can just stick the music on in the background, hop back over to TradeSpot and have both streams playing at once, I suppose. I mean, I don't really know, whatever. So yeah, and let's just check it out. Let's just see if TradeSpot is still kicking around there as well, and then I can send people back the way to him, because he train spotting? No trade spotting, because why not? He is still alive. Let's just check in on Jamie.
And
oh,
so
there he
this
is.
is why Apple is important, and this is why the short factor.
Well, it's Jamie, a whole new Jamie there with a different shirt on and everything. Wow, that's amazing. Getting this all-day Jamie action there, fantastic. Right, there's Jamie's stream in the chat. Okay, I suppose that'll be slightly delayed. You'll hear me saying that sometime after I've pasted it in. It was such a gift last night. Had so much fun connecting with everybody. Yeah, it was great. Super good seeing it. I could see it on your face, you know, really enjoying it, engaging in with the audience and that. And yeah, it's good stuff. It's always good stuff, man. It's always good stuff. You know it's going to be quality when it's Naldo on the mic. Right, sound. Okay, so thanks so much, AB Lopez, and of course Swi17033, and of course AB Lopez, Awkward Loan, Ronaldo, Space Captain, Mining Boom, Apple Blossom, Duro, Awkward Loan, all that stuff. Everybody, by the way, really appreciate everybody tuning in and hitting the like button. And if you leave comments and stuff like that, then you're a superhero as well. And then of course these guys up here as well. Give them a nice wee shout out. And thanks so much to the new members, Northwest Treasure, NW Treasure, and Katie Babes. Super appreciate your support as well. And then thanks for watching to of course the super chat people: Bad Mama Jama, Daniel Lesage, Michael Uribe, Kim Robbins, Antoinette, OPZ, Leptum Inc., Ape Z, Susie Chi, and Luke Sotos. And then to these chaps that subscribed, thanks so much for doing that during the show as well. It's fantastic. It's great to think, you know, it's amazing because I do see people subscribing there and then I see the numbers are so low. I don't know what it is. People just get enough of me, I guess. Right. Anyway, thanks so much for everybody tuning in. Massive love to all of yous. I'll see some of yous in the Discord at some point and I'll send you my best.